Well, we are seeing markets relatively unchanged today and almost somewhat subdued. That's after a nice rebound over the past couple of trading sessions. The TSX is slightly lower after gaining 1.1% yesterday and inching back into positive territory on a year to date basis after a very rough start for equities across the board from the beginning of the year until the past couple of trading days. U.S. markets are moving between gains and losses for the Dow, S&P, as well as the Nasdaq. After markets, U.S. markets, that is, extended a recent bounce over the past couple of trading days as well. Interesting action today in crude oil. This is after the OPEC Plus agreed to increase production by 400,000 barrels per day, which was expected. WTI first rallied on the news, perhaps because investors believe that they cannot meet those production targets. There's been an underinvestment over the past number of years, hence they wouldn't be able to increase production, and therefore WTI goes higher. But recently has been trading a little bit lower in the market, perhaps as a bit of profit taking and also maybe concerns about economic growth. We did see the ADP payroll numbers in the United States miss expectations. So there could be a little bit of concern on the economic growth front weighing on crude today. Away from that, of course, earnings are very much front and center. U.S. tends to kick off earnings season, and then Canada follows suit. On the U.S. front, the S&P 500, 40% of those companies have already reported, with 25% growth. So some nice strong growth that we're seeing in aggregate. Commentary from the company managements is very important, as I always highlight. And they are noting a favorable demand backdrop. They are saying that the supply chain and price pressures will persist over the next number of quarters. So be aware that we could continue to see higher prices and expenses. But importantly as well, they are talking about, or we are hearing some CEOs increase their CapEx spending. And that's obviously a positive. It gives us confidence that they feel confident about the demand outlook. Away from that, Google is the big news in earnings today. Huge quarterly beat, causing the stock to move up by about 7% or so. And now the company's market capitalization is reaching $2 trillion. But I do want to give you a little bit of the detail in terms of the stock. We did see search up, or the company fundamentals, I should say. We saw search up by 36%. YouTube was also very strong. It did have tough year-over-year comparisons. And their cloud business is up 45%. PayPal, very disappointing earnings there, setting that stock down by 20%. AMD in the chip sector, big beat there, helping that overall group. We also saw Capri, which owns Jimmy Choo, so retail and consumer demand for high-end luxury goods, have a nice beat, setting that stock higher. Starbucks, cost pressures there, a little bit of softness in China because of the zero COVID policy. But on a two-year basis, their U.S. comps are 12%. That's a very strong showing. Match Group, which owns Match.com and Tinder and Hinge, that is. Revenue is a little bit light, but operating income was strong, better than expected. And they are expecting to see some momentum in the spring and summer season for Hinge and Tinder. Importantly, as well on the corporate front, as we think about COVID, Pfizer is apparently asking the FDA for authorization for children 5 years and under. In Canada, on the economic front, Canadian building permits declined by 1.9%, but the value of those permits increased by 21%, the biggest annual growth on record. We did see GDP here in Canada released, and it did come in above expectations, 0.6% for November. BMO is saying that puts the annualized growth rate on track for 6.3%. That is above the BOC's target of 5.8%. So it does set up for a potential rate hike in Canada on March the 2nd. That is the next meeting. In terms of company news, CGI Group, the ticker there is GIB, trading higher on strong earnings. Headwaters Exploration, the energy sector, up on their fourth quarter report and production update. Spin Master was upgraded to a buy from hold over Canaccord. Target price there is $56. And also Brookfield Infrastructure, that stock is up nicely as well. Importantly, I also like to point out dividend increases for those interested in dividend income. Franco-Nevada, they increased their dividend by 6.7% over the past week. And away from that, what to watch for? Canadian jobs this Friday, 10,000 is the expected. And in the United States, 175,000 expectations.